Ladies and gentlemen, what rising interest rates will do for mortgages. Will it or won't it? I'm talking about the persistence of the current rise in inflation. It's hit 5% already. Long-time readers of my work will be familiar with my basic mantras, which hold good for all time, really. Let me remind you of a few of them. I work hard for my money and I expect it to work hard for me. That links up with the following. The best servant you will ever have is money. That's why all my life I have saved and indeed invested half my income. That means all that saved money has been put out to work for me to provide me with a further income. I work and my money works alongside me. And as time goes on, I need to work less because all my servants out there are also working for me. Most people work for a master and receive payment at the end of each month. They are also working to help their employer increase his income. I am an employer, and my money is working for me, and those servants don't argue, don't need insurance policies, neither do they go on holiday or fall sick, and they work 24/7. Since these blogs are part of the Unique Property site, I wish to link those maxims to the purchase and ownership of real estate. The problem for most people who own real estate is that they need to borrow money to pay for it. And unlike past times, the last 30 years have been one of declining interest rates, making the cost of buying a house cheaper and cheaper as the years have passed by. This should have made life easier for people to start saving and putting the money saved out to work for them. At this point, let me add another of my maxims that have guided me in my business ventures. The most advantageous way to buy real estate is to buy when interest rates are high but are decreasing. By contrast, the worst time to buy is when interest rates are low because the asymmetry is against you. Let me explain. The last time when it was a great time to buy real estate was during the 90s. By the time we'd got to 2004, things were starting to look grim, and I advised my clients to stop buying and maybe consider taking some profits. Maybe I was a couple of years early, but I don't regret taking my own advice. In 1991, interest rates were high, but falling. There had just been a house price crash. No one wanted to buy real estate, so prices were on the floor. Low prices, reducing interest rates, all meant it was the ideal time to buy. You can afford to buy because prices are low. You can assume prices will therefore rise, or at least not fall much further. And you can assume that as interest rates are high but falling, that they're likely to continue to fall. You get the best of both worlds. The asymmetry is in your favour. If we look at the opposite situation, existing high prices and interest rates on the floor, we have a situation where the only change possible is for house prices to fall if inflation continues to rise, and the only way interest rates can move is up. In short, the likelihood of prices rising is low, and the likelihood of interest rates rising is high. That means the asymmetry is against you. I maintain that now is possibly the very worst time to buy real estate. Obviously, I may be wrong, as I don't have that essential crystal ball, but the odds are against you at the moment. If you don't know the future, don't expect to win by betting against the odds. Now let's set that against the situation in which the economies of the world find themselves. Government bonds are yielding pitiful returns, even for a low inflationary environment. However, In an environment where inflation is rising above 5%, the return on those bonds is seriously negative. You are guaranteed to lose approximately 5% of your invested wealth every year. Put bluntly, that's insane. If you add to that absurdity by buying at the top of the market, future prices will almost guarantee you losing even more money. And when interest rates rise, you will start losing even more. Don't say I didn't warn you. Now let's look at some distinct possibilities. When inflation goes from 1.5% to 4.5%, as it has so far this year, that loss in purchasing power has tripled. That's not funny. If the rate goes from 5% to 6%, it only increases by a fifth. But if it goes from 1% to 5%, it's increased by 500%. That is a nasty hit to the average household. What does that tell you? Obviously, the average household is going to find the going tough. That means you won't get people chasing house prices higher because they won't have the money to do so. Now add to that the possibility of interest rates increasing by a similar amount. That takes the average household into ruin. It's interesting to note how this is set out in the media down under. I'm quoting, "Between 1990 and 2020, the Reserve Bank of Australia slashed interest rates time and time again, with rates falling from 17.5% in January 1990 to sit at just under 0.1% today." What would a reversal of interest rate policy do to household finances if the current rates simply rose back to 5%? The average household would be facing bankruptcy. And what will that do to house prices? Those who can't pay the increased interest charges will be forced to sell. Those who can't pay the increased interest charges won't be able to pay the higher costs associated with the loans needed to buy, so they will back off. House prices will fall. That will put more people underwater, and you can work out the rest for yourself. There is another side to this problem. There's also the demographic factor to consider. A growing population would mean that GDP was less likely to grow over time, no matter what. That would make debt and borrowing less of a problem over the years, as there would be more people around in the future to bear the burden. Unfortunately, rather a lot of pension schemes are not properly funded. In the UK, there is no government pension fund at all. A pension fund would be able to grow over time, but as there's no fund, there's nothing to grow. Pensions are currently paid out of taxation. What an absurd idea. So who will finance pension funds, welfare, and other government programs in the future? This is a problem that deserves a special article, and I will deal with this intriguing, but in my opinion, misguided argument next week. So do tune in. In the meanwhile, thanks for watching. Do press the like button down below. It does help in my ratings. And see you next week.